I'm Matthew Galgani with the IBD stock analysis for Thursday, September 11th. Today we'll look at Aruba Networks, a leader in enterprise wireless networking. As the September 5th New America column noted, Aruba provides Wi-Fi access points and the software to make them smart, fast, and secure. And the continued rise in mobile devices has obviously increased demand for such anytime, anywhere internet access. The Silicon Valley-based company has enabled Wi-Fi connectivity at Google and Microsoft offices, Starbucks coffee shops, and a wide range of hospitals, colleges, and other venues. Aruba says rival Cisco Systems has a 47.5% share of the wireless networking market, compared to Aruba's 15%. But analysts note that Aruba has been gaining market share in recent quarters. That turnaround is reflected in the company's last two reports. Aruba's earnings growth has gone from negative territory to back-to-back gains of over 80%. Sales growth has also picked up, showing acceleration in each of the last 4 quarters. For fiscal 2015, analysts expect EPS growth of 43%, followed by a 17% rise in fiscal 2016. Estimates for both years were recently revised higher. Aruba sports a solid 22% return on equity and a 44% 3-year annual EPS growth rate. That helps it earn an overall 98 composite rating. Large investors have taken note of the company's turnaround, and Aruba's accumulation distribution rating is a solid A-, and its up-down volume ratio of 1.8 also indicates demand. Also, the number of funds that own the stock has started to rise again, including a nice jump last quarter. Although you can't see it on the chart here, Aruba rose over 1,800% from a low in November 2008 until it peaked in April 2011. It struggled from there as earnings and sales growth slowed. But with the fundamentals showing more strength recently, the chart action has also started to shore up. In February, Aruba began working on a second stage cup with handle. The base is not without flaws. You can see how the stock spent much of the pattern below the 10-week line, and there were several down weeks on heavy volume in the left side of the base. But note this down week in July. Although volume was heavy, the stock showed a positive reversal, bouncing back from an intra-week low to close just barely down and at the top of its price range. So that heavy volume down week was actually a sign of support and accumulation. And from there, the stock began building the right side of the base. And on Wednesday, Aruba broke past the 22.59 ideal buy point. Let's take a closer look on the daily chart. Here's the cup with handle, and here's where Aruba recaptured its 50-day moving average line. From there it moved steadily higher, finding good support at the green 10-day line. And during that time there have been several heavy volume up days, a nice sign of institutional accumulation. The ideal buy point is 22.59, 10 cents above the peak in the handle. Aruba climbed above that price on Wednesday, and volume was 154% higher than normal, well above the 40 to 50% spike you look for on the day of a breakout. The buying range for a stock is up to 5% above the ideal buy point. For Aruba, that's from 22.59 to 23.72. As of early Thursday morning, Aruba was still trading within that range. Be sure to join Amy Smith and me for this week's radio show. We'll take a look at recent and upcoming IPO stocks such as GoPro, Mobileye, and Alibaba, and get into how to handle such new issues. For details on how to tune in, visit investors.com/radio show. That's the IBD stock analysis for Thursday, September 11th. Thanks for watching.